Hey everyone, are you interested in private financing and creative investing? Stay tuned. I'm with Brad Chase, co-founder and team lead of Team Chase Keller Williams right here in the greater Tampa Bay area. And we're excited to bring some knowledge for people like you who are interested in growing their portfolio simply from one property. So thank you for sitting down, Brad.
Absolutely.
Tell us, you've really built a huge real estate portfolio in an unconventional way. You started with one property. Just take us through, start from the beginning. How did you even learn to even do this?
Okay. So Hunter, this started back in when I was up in New England. I was trying to buy a property in Rhode Island and, had good credit, had the money in the bank, had a loan officer. I've been in real estate as an agent, had a loan officer who I gave all my deals to, and I said, hey, I want to buy this 3-family. It's a great deal. And he could not get the deal done. And I remember he took a bunch of realtors out and had a limo and we went to strip clubs. We're out having fun.
Yeah.
And I said, what's up with my deal? He goes, oh, that deal's a dog, find another one. And I almost felt like embarrassed. Like, what do you mean it's a dog? Like, this is a great deal. I see something here. And he just couldn't get it done. And the owner of the property was a very interesting gentleman. He was, he owned a real estate company. He was a general contractor. He owned a huge portfolio of real estate. And property had been pending now for about 45 days. And he said to me, he goes, what's up? What are you doing? I said, I'm trying to get it done. He goes, and I was at his office and I was all distracted. My phone's ringing. I'm like, he goes, give me your phone. I want you to go in my office and don't come out until you tell me how you're going to buy this property. And I had just read a book, Real Estate Riches by Robert Kiyosaki. That was 25 years ago, right?
Yeah.
Great book. And I literally sat at his desk with no distractions. And 10 minutes later, I walked out. I said, okay, this is what we're going to do. I'm going to buy the house. I'm going to give you 20% down. You're going to give me an interest rate. At the time, I think it was 8%. You're going to give me an 18-month balloon. Being that you own a general contracting company, I'm going to have you do you're going to do the vinyl siding. You're going to put the new roof on. You're going to do the windows. I said, I'm going to take care of the inside. He said, okay. And he said, one thing. I said, what's that? He goes, I need the next additional $5,000. I said, for what? He goes, in the state of Rhode Island, if I have to foreclose, it costs $5,000, so you're going to pay for your own foreclosure.
Okay.
I said, fair enough. Off to the races, we get our first house. And I made every mistake possible. Learning, doing the work myself, working with people. I get the deal done and, everything's done, it's rented, it's ready to go. The market shot up through the roof, values there. And we decided to move to Florida. And I decided not to have a long distance investment. We sold it, made a net of $82,000 on the very first deal, which is pretty spectacular. Like, I just had to think quick, like, well, what do you do?
Yeah.
With that being said, that limited belief of like the banks won't give me money was the best lesson that could ever happen to me, because I ran for 21 years buying and selling and investing and owning. One time I had 47 doors, hundreds of properties without institutional finance, because I learned a secret that most people didn't.
Wow.
And that was creative finance.
Yeah.
And it's a great way of doing business. Not till COVID and the rates went down in 2020, I think 2022, I did some refis on my properties because the rates were so low. And I started using institutional finance. And then once they saw everything that we were doing, it's all of a sudden, hey, how much do you need? What do you want? Here you go.
Right.
They roll out the red carpet for you. But in the beginning, it was like nobody was willing to allow us to have a chance or to do something. So being creative really pivoted my career, taught me some great lessons on how to structure deals. I had some crazy deals structured, that we were able to do. Yeah.
It's just so interesting to hear, for people who aren't nearly as educated, you are obviously in real estate. There's a lot of people I've talked to that they want to grow their portfolio. They're not, they have a day job. How did you go about educating yourself? What advice would you give people out there to start educating? Obviously, you want to be with someone knowledgeable like yourself. What did you do to really educate yourself?
So I'm not scholastically smart. I barely got out of high school. I think we paid for the diploma.
Yeah.
Literally, that's how bad it was. Went to college, had fun, no degree. So I thought of myself as not a smart person. I am financially smart, or not really financially. I shouldn't say financially. I'm smart in figuring out ways to get things done. So what I did is I started educating myself, reading different books. There's a guy, Ron LeGrand, he does Contract for Deeds, and anybody who's been in the real estate game for a long time, Ron's an old man. His ways work.
Yeah.
Is that something that you do all the time? No, but it's like you start to learn. You start to hang out with the people or look for ways to get things done that, make sense for you.
Yeah.
I remember when the market crashed in the short sale. I've been selling real estate for 27 years and investing for 25. So I remember when the market crashed in 07 and 08, it was a bloodbath out there. And I went on this appointment, and it was a house. The guy was asking $30,000 for this house. And so I go, it's a for sale by owner appointment. I'm like, hey, how are you? And I'm looking at it, and I'm like, hey, would you hold paper? And he goes, what the hell do you mean? And he goes, how much can you pay? I'm like, I don't know how much you want, how much you need. And the guy said $500 a month. I pulled out my calculator. I ran some quick calculations. I bought the house for $30,000. I gave him 20% down, which is $6,000, which means I had $24,000 to pay him back. To get him to the payment of $500 a month, I had to amortize it and bring the amortization back, to a low number. I did a 5-year amortization and bought a house, kind of like buying a car. I did 8% for 5 years. The payment was like $487. I bought the house. He was like, thank you. He got paid for 5 years, $487. He was thrilled because it also helped him. Owner finance is not just what it can do for you as the potential borrower or buyer. There's a ton of benefits for the actual owners on the other side too.
And I'm glad you brought that up. That was my next question is, obviously there's benefits on the investment side, and depending on the market, what do you most like about the creative financing side?
So, anybody who's ever gone through the mortgage process with a lender, it's basically, credit, we're going to pull your credit report, we're going to look at your tax returns, we're going to look at your bank statements, we're going to, do DNA tests, we're going to do blood type, we're going to take your children. It's a pain in the ass. It's a lot. What I like about the creative financing is if somebody has a need and you have a want and you can make it a win-win situation, 9 out of 10 times you can put a deal together. Because you're not being one-sided. And you're also sharing the benefits with the people as to what this will do for them. It's not just me.
Right. I think that's the great thing about this is it really can be a win-win. You mentioned it's, you've grown your portfolio from one single property into now, I think you had mentioned you have 60 plus multiple states, closing on more, you're reaching 100 units. There's a lot of people out there that are interested, but they are, there's a little bit of fear of not going the institutional route. What would you say to those people who are interested in it, but all their parents have ever done, what their friends are doing, they've just gone the institutional route? What would you say to those people?
I would say you have to have a comfort level. There's risk tolerance in anything, right?
Yeah.
So when we do owner finance, and don't get me wrong, Hunter, in my career, I had an incident blew up in my face with private finance because, I thought I was cool. My ego got in the way. I signed some papers because I was buying properties,
Yeah.
and there were some loopholes in some of the paperwork I did. And one of the owners that I bought from saw the amount of equity and was able to have a loophole that could have damaged me. you know, financially. You know, it was about a $100,000 lesson. It was 10 properties, and you know what I do know now is my attorney reviews everything before I sign anything.
Yeah.
You know, so the great thing about owner finance is you could set the terms. Like I'm negotiating right now. I have it under agreement. It's an apartment building. Did my due diligence up front. I already have the terms. It is a sweetheart of a deal. However, there's some electrical work that has to be done day one. Probably, you know, almost $50,000. It was not planned for that. So now I'm going to go back and I'm going to set provisions into the deal. You know, the people are more about the money. Like they want the price and they want the interest on it. They gave me a shorter term. So if I have to come out of pocket up front that I wasn't planning to, some additional money, I'm going to do what's like a starter rate. I'm going to bump the rate up. Like maybe I start at 2% for the first year instead of, you know, 5 or 7%. And I'm going to do a staggered interest rate, which will allow me to pay less up front and more in the backside so that I can afford to do the work.
Okay.
I'm also going to, they agreed to a 7-year balloon. I'm going to extend that balloon and say I want a 14-year balloon because now I don't have to touch it for, you know, many years.
Yeah.
It's all about making it win-win, right? They have a need, I have a want. Well, now we have something that came up and a lot of people may have walked away from it because it was uncomfortable. I'm okay being uncomfortable. I'm okay finding a solution to the problem. However, we're going to renegotiate a little bit.
Yeah.
And you know, one of the cool things about the owner finance is in every deal I do now, because I've also gotten much more educated, I'm in different groups and masterminds, and you know, I've probably spent close to $100,000 in the past, you know, 4 years on educating myself within what I do.
Yeah.
You know, to truly build wealth and, you know, create legacy for my family. I also, not only on the owner finance, you know, and get the mortgage, I also put a provision in that if they ever want to sell the note, I can buy the note for a discounted rate.
Wow.
So let's say the property is $300,000, you know, and the mortgage on it's $250,000, and they decide, you know what, we want to cash out. If they sold that note to another lender, that $250 isn't worth $250 on the fair market value. It's going to sell for less.
Yeah.
Because it sells based on the interest, the payments, etc. So why not buy my own note at any given time? And all that is a refinance.
Yeah. Wow.
Right?
That is creative.
Yeah.
Huh.
A lot of people don't understand that.
No. And you'd grown your portfolio obviously in the 2000s and markets, you know, a lot of things have changed. Right now, you've mentioned a little bit about what you're doing, how you're structuring deals now. How do you go about finding the deals and starting those negotiations? You've mentioned a couple times of finding the need, you know, and giving what they want and making it a win-win. Can you just expand on that a little bit more?
Sure. I go for no. How many times was somebody going to say no to me? The more no's I hear, the closer I am for a deal. So I know how to talk. I know how to present. I know how to find the pain or find the pleasure for the other person, discover the reason for the sale. I also know how to, I'm not a CPA, I'm not an attorney, I'm not a tax consultant. I do know there's tax ramifications when you sell. I do know that a lot of people, we call them the tired landlords, or maybe they're burnt out. You know, they've owned it for a long time. All of a sudden, a tenant destroys the place, and they're like, "Oh my God, I've had enough. I'm old. I don't want to deal with this anymore." Those are the easiest ones to get. And what's great about it is, you know, their accountant is depreciating the property every year. Typical depreciation, I believe, is 27.5 years for straight line depreciation. Well, if somebody's owned the property all that time, they've depreciated it all the way down, and they have a capital gain. So there's what's called recapture of depreciation. So now you go to sell it, you have the capital gain position, I don't know, 15, 20%, depending on your income bracket.
Yeah.
And then you have the recapture of the depreciation. That's a lot of money to pay in taxes. So, you know, when we come in and we say, hey, we have this option, you know, you've been collecting the money, you're tired of the properties, you know, what will this sale do for you? And they're like, just had enough, right?
Yeah.
Well, what if I can give them mailbox money for the next, I don't know, 7, I try to get at least 7 years for a potential balloon, when we amortize. I also put in, mutually agreed upon extensions for the balloon, so that way I never have to go back to the paperwork, right? I can run it all the way out for 30 years. But here's the great thing, you get somebody, and maybe they're a little bit older, and they're like, well, what happens if I die? You're gonna die. It's not what if, you're gonna die.
Right.
How is your structure? Is this in a trust? Do you have, how did you do asset protection, for family? They pass on, this money can go to their family on a monthly basis as well.
Yeah, that's a game changer, and I think what you've spoken to myself, our team, of how real estate can really grow someone's wealth and help families for generations. You've talked about the private financing route. There's different ways to go about it. You've mentioned a lot about how to seek deals, how to structure deals. Obviously, like anything, you need people around you, right? You can't just do it yourself. Whether you're in real estate, you're not in real estate yet, what people are most important to going the private financing route and just investing and growing your portfolio? And we talk about tribe here at Team Chase, having a tribe.
Absolutely.
Expand about the important people and pieces that you would advise anyone, whether they want to start with one portfolio, they have a portfolio but want to grow more. Can you tell us a little bit more?
So you can't go at this all on your own, right? Like a lot of people will say, oh, I got this. I'm gonna run and gun and I'm gonna do it. And great, they could until they can't, right?
Yeah.
What does Mike Tyson say? It's all fun and games. You get punched
Until you get punched in the face.
Right.
Yeah.
Get punched in the face. It sucks.
Yeah.
So you want to make sure, a title company, an attorney, depending, are we owner financing our properties to somebody else, which we do that as well. I don't want to necessarily buy another property, so maybe I'll sell with terms to somebody else. So then you have, you want to make sure they're qualified. There's companies that come in and do the full application. We have servicers that do it, and we have a trusted board of advisors, basically, is what you call them.
Mm-hmm.
It's like, I do not write my own paperwork. There's too much out there. I use a phenomenal attorney to do everything, and I could take his paperwork. I have it. I own it.
Yeah.
I could take it and recreate it. I don't. I'd rather pay him to make sure I'm 100%. The title company, we want to make sure that they do it. Now, some people will say, "Oh, that's not legal," or "You can't do this," or "You can't." And there's a lot of things out there. There's Dodd-Frank. There's consumer protection. You can't do fraudulent type, predatory lending. So there's a lot you really have to know to do it. But if you educate yourself, it's just like anything. If you educate yourself and you find out the steps to do it, then you surround yourself with people that are doing it and doing it at a high level with integrity and class and professionalism.
Yeah.
You're putting deals together.
Wow. Yeah, sky's the limit when you surround yourself with the right people. I know you had mentioned one book that you had read. Is there another book that you've really grown a lot from, private financing focus?
Yeah, there's The Banker's Code. I believe Nelson Nash. That was a great book. Kiyosaki, Rich Dad Poor Dad, was where it started. Real Estate Riches. Dolphy Roos. He was a gentleman who was in school getting his master's, and he did 2 real estate deals. Never went to work a day in his life in his profession.
Right. Yeah.
He's like, wait a minute. The great thing about real estate is you could really build, generational wealth through it, and you can create a lifestyle for yourself. And of course there are risks. There's risk in everything. I can walk out the door and get struck by lightning tomorrow. Right? I don't know.
Yeah.
But if I did, my family has a portfolio. And if the great thing is, I have one daughter, right? If she decided, I don't want any of this, if me and Stacy passed, and she said, I don't want any of this, she can sell it and not pay taxes on it.
Yeah.
Right? Because the way we structured the asset protection is a step up cost basis, right? Like, here you go, we're protected, everything comes in. You know, from the day that she would take over the ownership, from that day forward is what she'd pay taxes on, not when she inherits.
Yeah.
So a lot of people think, and I was one of them, right? Like, oh, the lawyer, they want $4,000, they want $5,000, or they want this.
Yeah.
Best money you can spend if you have the right person. You know, we did, I don't know, probably 7, 8 years ago, we did our death book, right? It's my asset protection, it's my will, it's my you know, all of the things. We built the family trust, we did everything. And every couple of years we have it reviewed. Is it done correctly? Are there anything else that we should change to it? You know, are we making sure that the different companies that we acquire in, you know, are we protected?
Yeah.
You know,
Smart. You had mentioned, you know, you've made mistakes along the way. You've gotten punched yourself in the face before. If you were to go back, your day one Brad again, what would you do differently?
use the professionals, not think that my ego was bigger than it was. You know, I thought I was cool. You know, I honestly did. I was putting deals together, you know, moving and shaking and like, look at me, you know?
Yeah.
And I got this.
Yeah.
I didn't have it. And come to find out that bad paperwork, you know, really put me in an awkward position, and it was scary. It was very scary.
Yeah.
You know, at the time, my daughter was in college. You know, COVID was happening. You know, it was just not a good situation.
Yeah.
And I was able to get out of it, but it cost me about $100,000.
Wow.
You know, and you know, I had to liquidate some of the properties. You know, but you know, making sure your paperwork is good, making sure your team is good. You know, there's no I in team, right?
Mm-hmm. Yep.
So if I have the people around me that can help me and lift me and guide me, you know, we started going into different mastermind groups. I mean, one of the groups I joined was $50,000, and I told somebody that. They're like, "Oh my God, you spent $50,000." You know, I did. You know why? Because it makes me better. It opened up my mind. It opened me up to other people in those rooms and relationships that allow me to continue to grow.
Yeah.
And that's good. I mean, where we are today, my vision wasn't as big, right? And I was looking at it, and I had tunnel vision. I couldn't see how to get to where I am today. And an opportunity came. And you know Stacy, and
yeah.
She basically said, "What the hell's wrong with you? You know, stop being I'm not gonna say the word,
yeah.
We're on video, and figure it out."
Yeah.
And I did, and I acquired. I have a non-recourse loan on it. I mean, now the greatest thing is if I could do non-recourse, that means I'm not personally guaranteed for it. Not that I'm gonna want to fail or do bad things, but it can't come after me personally.
Mm-hmm. Yeah.
So, I don't know. I mean, anybody who's intrigued with real estate, you know, it's one of those things, like, it starts with one and it becomes a snowball. Like, you don't go from, you know, one property to 20 or however many, 200 overnight. Mm-hmm. It's you grow, you learn, you make mistakes, you figure out different ways of doing things. You educate yourself. You know, I'd have a vacancy, and I remember one time in the beginning we would run $99 move-in special, no security deposit.
Wow.
And then all of a sudden we get the property back, they don't pay, and they trashed it, and I'm sitting there going, what the hell did I just do wrong?
Right.
You know, so even on the qualifying the tenants, it's very systematic.
Mm-hmm.
You know, we don't change our our requirements for anybody.
Yeah.
You know, if somebody's been evicted, guess what? You're not living in one of my properties. Next. I don't care what your story is. I do not care.
Yeah. Yeah.
You know?
Yeah. You got to protect your asset. Yeah.
You do.
Yeah.
And you know, if you run it as a business, it gets better. And we're evolving every day. I mean, you know, we're doing things now that we didn't do 2 weeks ago. We didn't do a month ago. You know, and as we're fine-tuning and growing, it's getting more and more systematic and more structured,
yeah.
which is great.
Yeah. And what I I've learned and I keep learning is whether it be you were investing in the 2000s, now we're in the 2020s, and so so on and so forth. Investing this type of strategy is almost, correct me if I'm wrong, it's almost bulletproof. I mean, things change and whatnot, but like you'd mentioned, some of the books that you had read, the investors that were doing this, in the 80s and 90s, they were doing this. I mean, do you see any changes right now that you would advise, or what are you doing differently than what you were doing 15, 20 years ago?
Yeah, I mean, there's changes. There's different ways of looking at it. What are you looking for? Some people are hell bent on cap rate. Some people are cash on cash return. Some people take a much lower cap rate and I can do this. I'm not doing that. But here's the thing: there's no right or wrong way to invest. It depends on what makes sense for you as an individual, right? Yeah. So we've done short term, we've done mid term, we've done long term, we've done fix and flips, we've done quick flips. At the end of the day, long-term hold is where most of the money is made. So any other way I'm doing anything, it's to keep acquiring for the long-term hold. Mm-hmm. We're now into tax deeds, we're into notes, we're into paper assets, which is great. I still love the real estate for some reason. Some people say I'd rather have a root canal than own the real estate, but I don't know. I like it, and I think it's because it's tangible. I can touch it. I can, see it. And if you do the right things with it, it rewards you. The real estate gods are just like, hey, here you go. And there's a lot of uncertainty out there, right? Like the market's been up for 14 years, right? I think 2010 the market hit the bottom, and 14 years later it's still trugging along. We should have already had a correction. Are we there today? I don't know. Can I buy today? Absolutely. Because I'm not buying based on the equity position of what I'm buying. I'm buying based on what will the property do for me. Can I stabilize it? Can I improve it? Can I create value? And can the income that's generating from the property sustain the property? That's what I care about most. No. Then when I come back and revisit it a couple years, 3, 5, 10 years down the road, and all of a sudden it's worth, 2, 3, 4 times what I paid for it. Yeah. I'm like, wow, I was smart, right? Yeah. I did good. Yeah. So, I think there's no right or wrong way to invest. It's got to make sense for you. Not everybody would do the type of investing I do. And there's others out there where I look at what they do and I'm like, well, I'm not interested in that. So let's find out what makes sense, find out your why, what will it do for you, and then, try to put a plan together. Yeah, I love that. And that's a great segue into the last question. You've given so much information to the viewers out there, myself. There's a lot being thrown at everyone. If you're sitting down, you're watching this, two plans of action after watching this video, what would you do? Call me or Hunter, right? Call us, because we sell real estate. Yeah. And not only do we sell real estate, we know how to help people build a wealth plan around real estate. And just educate yourself. Find out what it will do for you. Not everybody wants to be a landlord. Not everybody things go wrong. Some people will say, it's funny, we have clients, you obviously know, on the property management side, oh, what do you mean I have to put a new roof on the house? Or, now I got to put $15,000 into the property because, the last tenant was there for 9 years and you didn't do any work, right? Yeah. If I have a tenant for 9 years, I'm celebrating, right? Because I'm not spending the money on the property, but you have to also be prepared for when that tenant moves out, you're redoing most of that property. You may have to replace the kitchen. You're definitely painting, you're definitely replacing floors or updating or doing something. Yeah. And people don't think that. They think, oh, I'm gonna buy this and it produces this much money monthly and that's it. Yeah. Not what if the person that's living in the house loses their job or dies. We've had people die. We've had multiple people die over the years that were tenants of ours. Yeah. What do? You start over. Right? Yeah. People, hey, let's redo the property, get another tenant in.
Yeah. Well, thank you so much for your time. There's been so much information. I think what's powerful in all that too is really uncovering your why. So thank you for your time. And
Absolutely.
If you guys are interested, want to learn more, feel free to comment below, and we'd love to connect.
Yep, absolutely. Thank you.
Thanks.